Hello and welcome to this intro to Nadex Options for the Candlestick Trading Forum. If you joined us on the previous one with Stephen Bigalow, I'm Dan Cook with Nadex, the Director of Business Development here. I want to apologize for the technical difficulties we faced. Unfortunately, unforeseen, and sometimes those things happen. Just like with trading, we've got to do what we can to make the best of it. So with that, I'm going to be doing a quick recording today that I was going to cover during the Candlestick Forum presentation. I want to thank everybody for joining that, and want to thank Stephen Bigelow for having me on. Again, wish we could have got the presentation in that evening, but we're going to take it from here, and hopefully this will be helpful for everyone. So what we're going to take a look at today, I'm going to give you a very quick intro to binary options. It's going to be a very high-level overview. This is not going to make you an expert by any means, but it should give you a good taste and a good starting point. I'm going to recap Stephen's indicators that he mentioned. It's probably been a little while since the presentation, so I'm going to recap Stephen's indicators, what he uses on the chart in addition to the candlesticks. And then we're going to go into the platform and show how to apply those indicators in the Nadex platform. Then we're going to place a few sample trades. So before we begin, a quick risk disclosure. Obviously, trading involves risk. It's not appropriate for everybody. You should only trade with funds that are risk capital, right? Grocery money won't do. We're going to be looking at trades. Please, this is educational only. This is not a trade recommendation. If you're seeing this, it's probably already after the market conditions have passed. Real quick, just keep in mind this is educational. One thing I like about this, if you're trading futures or forex, typically in a disclosure, or really any type of margined product, you'll see a note that says you can lose more than the total value of your account, and that does happen in some cases. One of the things I love about Nadex and why I'm very passionate about it is all of these contracts are fully collateralized, and we're going to take a look at that. So there are no margin calls at Nadex. So let's get right into it. Binary options, what are they? The first thing I want you to understand is it's not a different market. It's just a different way to express an opinion in the same market. So the same analysis that you use if you're trading futures, I don't care if it's commodities, stock indices, if you're trading spot currencies, the analysis is going to be the same. All we're trying to do is determine, is the market going to go up? Is the market going to go down? In what time frame? To maybe what magnitude, right? It's the same. If we think it's going to go up, we buy. If we think it's going to go down, we sell. That's simple. So don't get too confused or think that this is too exotic. 99% of what you know about trading is going to remain the same for how you're trading now, with a couple of nuances. And I'll talk through those when we get into the platform here in a little bit. So binary options are short-term fixed risk contracts. And again, a lot of these points should become clearer when we start taking a look and placing a few of the sample trades. They're basically a statement made up of three components. There's an underlying market, so it might be like the E-mini S&P, it might be the mini NASDAQ, oil, gold, currencies. There's a condition or a strike price, and there's an expiration time. I look at these as sort of simplified options. So if you are an options trader, if you're not, don't worry about it, not required to trade these. These are actually an excellent way to get in to understand the theories of options. But whether you're buying or selling, your risk and reward are both capped. They trade in a range of 0 to 100. Each contract is worth $100, therefore each point is worth $1, and they trade in 25-cent increments. Think of it as a true or false statement. It's either the event happens or it does not. At settlement, the option will either settle at 100 or at 0. So if it settles at 100, the buyers, who are basically saying if you're buying this is true, or you're answering yes, they would get the $100 if it settles true. If it settles false, the sellers, or the people saying that it's false, will get the $100 if the option settles at 0. If you think of price, and if you're an options trader, you may look at this like delta. Think about it as a probability. What is the probability of this event occurring? In similar traditional options, time and volatility are factored into the price. But if you're not, if you haven't studied Black-Scholes, if you haven't studied options modeling, not necessary. You can look at price, and one of the things that I say these are a little bit simpler to trade. You can look at the price. You see right there the probability. You can look at it in relation to the underlying market, which we'll do in just a bit, and I'll explain. And so it's a very easy instrument to get familiar with. Now there are some nuances though, and trading, while it's not physically demanding these days, right? We're not on the floors anymore pushing each other around. Trading itself, the goal to make money is not necessarily so easy, but I like these because it gives an opportunity where you know your risk, which to me is the most important thing, is defining my risk with 100%. One thing I really want to point out where I've seen a lot of people get confused as well on these, and I'm going to do a couple of examples. You don't have to wait for expiration to close a position. So if you buy a binary at 30, right, they range from 0 to 100. If you buy a binary at 30 and it goes up to 60, you can close that position. You can take your profit. Similarly, if you buy a binary at 30 and it drops back to 20 and you're down a bit, you can close that position to limit your losses. It's a very important aspect, and one where I see a lot of people kind of not really struggle with, but don't really get it. They're thinking, okay, it's going to be 100 or 0. Let's let it roll. This is a trading market, right? You can trade in, you can trade out. So let's just take a look at a quick risk-reward profile of a binary option, right? Nadex is an exchange. We match buyers and sellers. So when a trade is matched, there's going to be a buyer on one side and a seller on the other. They're going to, between the two of them, put up the full $100 of that contract. So in this example, this was the US 500. The underlying market for this is the E-mini S&P traded at the CME. In this case, I have the order ticket that is a price of $60. If we look at the left side, the buyer is putting up $60. That's their maximum risk. If you're a buyer, your worst case scenario is 0. Can never go below 0, can never go above 100. So your worst case scenario, if you buy at 60, is 0. That's worst case, and that's represented by the red. Your best case is a level of 100 at expiration for a return of 40, not inclusive of exchange fees, which are $1 per side. In this case, you might ask, well, why would I pay 60? Why am I putting up 60 and the seller only has to put up 40, right? That's the full $100. The reason being is the probabilities are in the buyer's favor, right? In this case, and I'll show some examples when we look at the charts, the market is already over that level. So even if the market doesn't move and it stays there until expiration, that contract then would settle at 100, so it'd settle in the buyer's favor. So it's all about probabilities. If we look on the right side at the seller, their risk is $40. By the way, you'll see these in the order ticket before you place the trade. You'll always know what your maximum potential risk is and maximum potential profit, right? So if I buy at 20, I'm going to be risking $20 with the potential to make 80. But in that case, the probability, or what the market is saying the probability is in the seller's favor. If I'm selling at 80, my worst case scenario is 100, right? If I'm selling, I want it to go to 0. So if I'm selling, and I'm selling at 80, I'm risking $20 with the potential to make 80. So with that, I'm not going to spend a lot of time on this because I want to hop on the platform. I want to keep this pretty concise. So just as a reminder, these are Stephen's chart indicators that he covered in his presentation. We've got 3 simple moving averages, we've got the stochastics, and we've got the T-line. So with that, I'm going to hop into the platform, and we're going to take a look real quick, an overview of the platform, and then we'll take a look at applying this analysis. Okay, so we've got the Nadex platform here. So this is what you'll see pretty much when you log in. Real quick, and if you need some online tutorials as far as how to use the platform, we've got a full suite of educational products as far as the platform and Nadex on the website at nadex.com. Also, there will be a link accompanying this video, which if you click on that, it'll take you 30 seconds to apply for a demo account at Nadex. It's free. It's good for life, whether you ever open a live account or not. We want people to get in and experience the platform. I think it's great. I think these contracts are great, but we want you to understand them fully before you put live money in. So once you log in, on the left-hand side, you'll see a whole list of choices. Nadex offers 2 types of contracts, binary options and spreads. In this case, I'm just going to be covering binaries. So we've got them on indices. So we've got 4 of the major U.S. equity index futures, and we've got 4 international. So Japan 225 is on the Nikkei. We've got the Germany DAX, the FTSE, and the China 50. Close this for a moment. We've got binaries on commodities. So if you want to trade copper or corn, crude oil, gold, natty gas, soybeans, or silver, You've got those. What we're looking for is the most popular markets and the markets that people are interested in. We also have spot currencies, binaries based on spot currencies, so all the majors and some yen crosses. So if I would like to trade the E-mini S&P 500, I'm going to select the US 500 out of my list, and I can select the time frame. So there's 2-hour here, intraday contracts, daily and weekly. So I'm going to select the daily by left-clicking on it. We'll see in our markets window now, we have a whole list. Some would call this a strike chain, multiple binaries. Now, I think one of the easiest ways to get accustomed to binaries, particularly when you're in your demo account, is to look at a chart. So I'm going to go ahead and open up this chart. I just used that stair-step symbol there. And we're going to open up the chart. And so we can see, and I'll just resize this a little bit by left and scrolling on the side here. So we've got a chart set up. On the right-hand side, you'll see the list of strike prices. If we look, we see buy in the blue and sell in the red. And we'll go through that in a little bit more detail in just a second. But basically, as you can see, the market, and this is the standard rule of thumb for a binary option, if price is above the binary strike, it trades at greater than 50, right? It's better than a 50-50 proposition. If the strike, and you see these lines here on the chart, if the strike is above the market, the probability is less that it'll happen. And when it's right at the money with time remaining, it should be trading somewhere around a midpoint of 50. So to apply Stevens indicators to the Nadex chart, what I'm going to do is just left-click on the chart. And you may not have seen that, so I'm going to do it again. Look to the bottom of the chart. I'm going to left-click and go back. You see your time frame. I'm going to left-click again. And this is the Tools tab. You access that so you can change your interval from, say, 5 minutes to 30 to daily. You can change the chart types if you like line, bar. Obviously, we're talking about candles. I know that's Stevens' preferred method, mine as well. Indicators, I'll show you in a second. Drawing tools, layouts. You can choose different things to show. So let's go into the indicators, and we're going to apply these to the charts. So all I did was click on indicators. On the left-hand side, a menu opens up. So with Stevens indicators, we've got the stochastic indicator, and I'm just going to apply all these. I left-click on the stochastic. I'm going to apply the moving average. This is a simple moving average, and Stevens uses 3 of these. I'm going to click on moving averages, and the T-line, or the exponential moving average. I'm going to go in and we're going to show how to adjust these. So once I've selected my indicators, I'm going to go back to the chart and left-click again, and that's going to take those away. Now then, I want to put my settings on these indicators to what Stevens has set. So I'm going to go, and if you notice, a box opens. When I click on the stochastic there, a box opens. And here's where I'm going to set my periods. So from the presentation, I'm going to set a 12 period, a 3, and a 3. And I can change the thickness of these lines. I can change the colors all down here, and click Apply. Next, I'm going to set my moving averages. Again, move to where the indicator is, the box there, you'll see it. Right now it's set up as 20, 50, and 100. So I'm going to adjust this. We have the 20, we have the 50, and we have the 100. Stevens uses a 20, a 50, and a 200, so I'm simply going to type 200 in that box. Again, I can change the color, I can change, do I want it dashed, the thickness of the line. Because this is a presentation, I'm not sure how well it's showing up, so I'm going to leave them as thick as possible. Click Apply. And now the last remaining one to set up is our T-line, so our exponential moving average. By the way, if you want to add more lines, you simply tick these boxes and set the parameters, and that'll add additional lines. In this case, I just want one exponential moving average that I'm going to set to 8. And I'm going to make that dotted so we can identify it on the chart. Click Apply, and our chart is set up. We can also adjust if you want a little bit more space on the indicators. You can just left-click and scroll. Same thing on the price axis here. And so now our charts are set up. So we're going to look, and again, I'm not doing a whole lot of analysis here. Stephen is the expert on candlesticks, but actually looking at this, it looked like we had a signal. So when the next bar opened, Stephen would probably say, I think if I remember correctly, but I don't want to go too much into it because I probably get it wrong. You know what? So I'm not going to. When you buy or sell, down here, similar thing. We may still be in a buy trade. But let's say that I had a signal developing here. I don't really see one. I'm just going to slide my chart over a little bit. let's say that I thought the market was going to move up. And one of the things I think are great about candlesticks is because you can also get a time frame reference, right? So we've got a daily binary option here. So I've got a few different choices I can make. If I think, and by the way, this is in the demo account. The demo account is based on the actual exchange technology. So that's one of the benefits of it. What you won't see is actually typically um, the tight pricing that you see in the live account. By the way, you can open up a live account, take a look at the live platform, see what the bid offer spreads are. But yes, in the live account, we have multiple market makers that are making markets, all competing for your orders. So in the demo account, you don't see quite as tight of bid and offers. I will point that out in case anybody's freaked out at this point. So let's just take a look at placing a few trades. So as you can see in this particular option here, I've got a buy price of 65.50. I don't have to take that. I can actually work an order, and I'll show that in a second. But let's say I thought the market was going to go up from here. Now, obviously, it's already made a decent sized move, but let's just say I thought it was going to go up here. I can place a buy order. So a couple of different ticket types here. I'm going to put a limit order in rather than a market, just so I can walk through it. See the depth of market, or you can just look at the top of the book. If I want to do a limit order, and I'm going to do a size of 10 here, 10 contracts. Actually, let's back that up to 1. If I buy at 64.25, what you'll see on the order ticket immediately is you have a max loss of $64.25. You have a maximum profit of $35.75. So I'm going to go ahead and place this order. I'm going to click close, and so right now you see on the chart, if you didn't notice that, we'll walk through a few more. On the left-hand side, you'll see a red flag. So it says that you bought one to be over the strike level of 28.09. Currently our floating profit and loss is minus $7.50. By the way, if you are trading traditional options, there's no multiplier here. So it's unlike when you're buying, one options contract in equities and you buy it at $2, it's actually a $200 contract. There's no multiplier here. And that's one of the reasons this gives people such easy access to the markets where they can do it sensibly, is because if, let's say I wanted to trade crude oil, I might have $10,000 in my account and say, my broker will give me intraday margin, and I only have to put up 50% of the margin required. I can do that. I can place that trade, but is it sensible with $10,000 to trade a contract that trades in $1,000 per point? Definitely not. That's one of the reasons I love Nadex. We're really designed for the individual trader. And so we see our line here. If I wanted to, I can click on this. So if I want to close this position quickly, if I think all of a sudden it's running against me, I just left click on the flag there. It'll open up an order ticket I bought, so it'll be the reverse. Or I can go over here. I always prefer to use the flags. So let's say we wanted to close this position out. It looked like it was turning on us. We thought it was going to go higher, but it didn't. Just going to click on that. I'm going to click place order. Click close. Now let's say I thought it was going to go up. Let's say I thought we were going to get a good move. We're just about to break out here. Let's say we're looking at a break over our 200 average here. We get a break and we think it's going to go higher. We think it's really going to explode. I can go in and I can buy this binary at $15.25. In this case, let me switch to limit order here. In this case, I'm buying the binary, right? The market's saying there aren't great probabilities, but we're doing our analysis. And the analysis is telling us, no, we really think this is going to happen. I can get in relatively low price. So in this case, if I'm buying at $15.25, I'm only putting up $15.25 with a maximum potential profit of $84.75. Now, in this case, I'm going to trade 10 contracts, right? I want to show you how to work a limit order here. So in this case, right, everything's multiplied by 10. So now we're risking $152.50 for 10 contracts, potential of $84.75. So let's go here, right? I have my order in now. Now the rule of thumb, remember, if a binary option is trading at the strike, it should trade somewhere around a midpoint of 50. So I bought this option at $15.75. I'm going to left click on the flag here. What I'm going to do is I'm going to go in and I'm going to put a limit order. We've got 10 contracts on, right? I'm going to go in and I'm just going to sell 5 contracts if it gets to a price of 35. And I'm going to place that order. And I'll walk through this again. And now we can see we have 5 working orders here. I'm going to go in and click this again, right? Because I have 10 contracts on, so that only takes 5 off. I'm going to place another 3 to close if the market hits a price of 50, and I place my order. I have 2 working orders now. If I want to see what both of those are, I just click that plus and it opens them up, right? We want to save real estate. I can see where it's at. If I want to look at the actual order ticket or amend it, I can go in here and I can amend the price, and then just click amend. So now if the market moves up to this strike price, right, we've got limit orders working. And if you're trading around news announcements, I definitely recommend that because the market can move fast. If I decide, you know what, I was just wrong, I don't even want to risk that 15, what I'm going to do is I can go ahead and I can just delete these. If you do have working orders, remember to delete them. And I'm going to go ahead and, you know what, we're down a bit. I don't want to lose the whole amount. I'm just going to go ahead and place order to get out of there. And now my position is flat. So I'm going to walk through one more order, a sell order. Now let's say we thought the market was going to go down. So it's crossing the T line here. And again, I'm going to let Stephen do the analysis. But let's say we thought it was going to go down. And another handy trick when you're looking at binary options, let's say I could sell this one at 53, right? So if it crosses below the next line, right? If you see these lines, look at the one right above it. So if I sell at 53, and this is not taking into account time, if it moves to the next line, it'll probably be priced somewhere around a 35. That's just a good rule of thumb. You can use the strike chain. For example, on the sell side, if I buy this one at 63 and it moves up one strike, it'll probably be trading somewhere where this one is now. Now, time is a factor, so get used to those things, but that's just a handy little trick. So let's say I want to sell this binary. I'm going to go in and sell it at 55. I just want to give a quick sell example here. Again, I'm going to switch to limit order so you can get a flavor for this. If I sell at 55, again, my worst case scenario is it goes to 100. So in this case, I'm risking 53.50 with a potential of 55.50. Right? So the price, when we're buying, the price is basically what we're putting up to place that trade, or the overall risk. When we're selling, the price is actually our potential profit, right? Because it's the 0. Our risk is to 100. So if I sell this contract, one contract, I'm putting up 53.50, I'll place order. And it's as simple as that. I definitely encourage you to get in, take your time in the demo account. As I mentioned, there's going to be a link accompanying this video that'll take you to Nadex. Get in, explore. We've got a great customer service. Their contact information is on the platform as well as on the website. They're more than happy to help out, but I'd love for you to take a look at it, and I'd love to hear your feedback. Thank you very much for your time, and best wishes for great trading in the markets.